Hello, South Bay. It's July already, and the real estate market is heating up faster than the weather. But not all is sunshine and clear skies. Stick around a few minutes and find out what that might mean for you. The average home sale price around the South Bay is $1,354,249. Now that combines the average of single-family homes, townhomes, and condos. We can also see the median price in each of the South Bay cities that range from $643,000 in Wilmington to $3,790,000 in Rolling Hills. We see a lot of red on the map as expected, since we are comparing today's prices to the absolute peak of the market last June. Now, things aren't all doom and gloom, but rather looking pretty good for home prices. Let's look at how things are trending in the last month and over time. As we can see, most areas are trending up in the last month, with significant growth in the last 36 months. As a note, about 12% growth over the last 3 years would have been considered normal. Also, home prices and home values are not always the same thing. To find out why they are different, you can click the link above for my video explaining price versus value, or watch this video first and click the link in the comments below. Now, comparing our prices, the median price in all of Los Angeles is $815,000. In California, it's $744,000. And for the entire country, it's $346,000. If you want to find out what your home's worth right now, contact me and I'll send you out a free report. To give an idea of that range of homes that sold in June, they range from this 627 square foot, 1-bedroom condo in Inglewood that sold for $351,000 to this 4-bedroom, 4.5 bath, 3,750 square foot home right on the beach in Hermosa Beach on a 2,400 square foot lot that sold for $14,250,000. Hello everyone, Steve Huhta here from HousesInSouthBay.com, bringing you the South Bay Real Estate Market Report for July 2023. Please remember to do all the online stuff like commenting, liking, and subscribing. It really helps me with the algorithm, but most important, ask questions. I am here to help. Now, we know that prices going up and down is a factor of supply and demand, and this is where I mentioned that the market is heating up. On the supply side, we had 627 active listings in June throughout the whole South Bay area. That's down 27.8% from the same time last year. Of those 627 homes in inventory, 378 are new listings on the market in June, which is down 38.3% from a year ago. So the supply side is pretty low for this time of year. Let's look at the demand side. We had 369 homes sold in June. We also had another 270 homes pending, which means they've signed contracts, but the sales process isn't complete yet, and we'll see that in future months. So homes are selling at about the same rate that they're coming on the market, keeping prices on that upward trend. The average days on market is 24, with half those homes selling in less than 10 days. So homes are selling fairly fast, and that's why we say this market's heating up. Now, because those supply and demand numbers can be a little crazy, an easier way to look at how supply and demand balances out is with inventory months of supply. With only 2.2 months of supply right now, which means if no new homes come on the market, we would sell out of homes in about 10 weeks. So with increased demand and still limited supply, we believe prices will remain stable and even keep going up in most areas. Now, there is no crystal ball, but we see no indicators that home prices will soften in the near future unless something drastically changes in the economy. Employment's still strong, consumer spending is very strong, new home builder sentiment is still strong, and that industry does a lot of research, and they believe that there's still a lot of people wanting to buy new homes. We just don't have enough homes to meet the demand under current conditions. We're seeing multiple offers on correctly priced homes. I mentioned at the beginning what these numbers might mean for you. Well, for seller, demand for correctly priced homes is still high. And when I say correctly priced, I don't mean discounting. Use the data for your neighborhood and position your home to attract the most amount of buyers and have them compete against each other. Pricing your home correctly will get maximum buyer competition. Also remember that in this market, preparing your home for sale can make a big difference in the sale price and how much money you put in your pocket after closing. Now that can range from simple decluttering to doing some deferred maintenance, simple repairs, or even some renovations. We're also seeing staging making a big impact on sale prices lately. So talk to your realtor about what might be right for your home. Talking about your realtor, you need an active and aggressive agent to market your property to the most potential buyers and one that keeps up on marketing trends and data, like these videos. If you're looking to maximize the value of your home, reach out so we can put together a plan that's right for you. And for you buyers, it's actually a pretty good time. Buyer demand and competition is rising, but prices haven't jumped up yet to reflect that demand. You can take advantage of this. We believe that prices will continue to rise in the long run, so it's probably a good idea to buy now before they go up any further. If you have any concerns about uncertain interest rates, give me a call and let's talk with a lender about all the options available. In fact, most lenders I'm working with right now have programs to lower your interest the first 2 years, and they'll refinance your loan for free for the next few years if rates go down. Just remember, do what's right for your family's budget and needs. But also remember to look at that long-term benefit of owning instead of being at the mercy and uncertainty of renting. Rents will continue to rise as long as there is demand for more housing. But when you buy, your monthly mortgage payment, it's locked in and will not change. Ask anyone you know that bought a home 10, 20, 30 years ago. See if they regret their decision. My guess is you won't find anyone. No matter the state of the economy, you still need a place to live and build memories with your loved ones. Would you rather be doing that while paying off your own home or paying off your landlord's home? Let's talk about your real estate goals for this year and send me your questions on buying, selling, or investing in residential real estate. Remember, contact me so I can help. Bye for now.